Our next guest writes that the Trump administration has failed the retail industry in its response to the pandemic. Rick Helfenbein is the former CEO of the American Apparel and Footwear Association. Good morning, and thanks for being with us today. You used a baseball analogy and saying that the Trump administration is close to striking out with the retail industry. Can you explain that for us?
Oh, that's easy to explain. You know, the old thing, 3 strikes and you're out. And we had a first strike a long time ago, one that your network is very familiar with, called the bat tax. That went away, fortunately. Then we got hit with tariffs. That was strike 2. And now we're in a real problem, which is a liquidity crisis. You know, the PPP program was wonderful in a lot of respects, but many retailers, quite frankly, just couldn't take advantage of it. A whole host of reasons. But they were looking after the employees, which is just fine. But if there's no business to come back to, that's not going to help in the long term. We are suffering right now from a cash liquidity crisis. We can't get money to fund our inventory. That's basically what's happening. So, you know, you look at what happened. Spring goods were coming in, and then the retail store closed. So they got piled up in inventory. In order to alleviate that, you have to sell it at a discount. That affects your liquidity. Not being open affects your liquidity. And then you look at what happened with the supply chain. The whole supply chain essentially collapsed. Reason for that, unfortunately, globally, a lot of orders were canceled. And, you know, that affected the pipeline. So now the pipeline opens up again, and we're set with a new whole host of problems. There's COVID in a lot of the countries that manufacture. That's a problem. Not being paid. A lot of the factories, unfortunately, closed. China is the only one that's really open. And yet we go to China to buy goods for fashion retail, and what happens? We're hit with these tariffs. So you look at it, no matter how way you look at it from any point of view, what we would really like from the Trump administration and from Congress is to secure some funding for liquidity, meaning credit risk insurance or backing the credit market somehow, so that we can fund our inventory. Because what's the point of supporting all the workers who have been fabulous if you don't have any inventory to sell, if you can't run your stores? So, you know, we end up in a situation that it's a doppelganger, basically. We saved the workers and lost the business.
Rick, I've heard it been called accelerated Darwinism because a lot of the problems you just outlined, yes, but some of them were already well underway. So you've also spoken about how some of retail is going to survive this, but what separates those that are going bankrupt and those that will persevere?
The ones with the deep pockets will survive. The ones with the shallow pockets are going to have trouble. You see every week a new list of names that have filed. We certainly know about JCPenney and J. Crew, and this week was Lucky Brand, GNC. I mean, you go down the aisle in a shopping mall, and you see all the names just disappearing. It's you know, this Darwinism thing. Look, retail was in trouble before, no question about it. The biggest problem we had was too much square footage. You're looking at 23 square foot per person in America. Compare that to China with 2.8 square foot per person. We have way too much space. We have way too many malls. At one point, we had 1,500 A-grade malls. Now we're down to about 1,100. It'll probably be below 1,000. And, you know, a lot of these malls are anchored by some of these big name department stores that are suffering right now. So, yeah, Darwinism at its best, but let's just say retail had problems. COVID accelerated those problems, and they can only get worse unless we can fix this liquidity situation. If we can't fix the liquidity situation, it's going to be even worse. But let me hit you with some good news, if that's okay. You know, I follow the XRT index, the retail index, very closely. And if you look at it a year ago and you look at it today, it's about the same. That means that Wall Street believes we will work this out. And a lot of people believe we will work it out. But, you know, unfortunately, it's going to be more of a bloodbath before it gets better. And that's going to be the state of affairs going forward.